Alrighty, hello everybody, and welcome to the weekend video from bullwaves.org. I am your host, and I'm going to go through the 9 markets again. You might get bored of this, but I'm going to go through the 9 markets that I follow. I'm going to go from the 4-hour down to the hourly chart, and we will take a nice wide-angle view of what's happening, or what happened this week, and what we should possibly expect next week. We were looking for a top in euro dollar. This is the 4-hour euro dollar chart. So let's just dive right into euro dollar here. Last week we were looking for a top. It looks like we have that top. Well, with one caveat, we may have the top in euro dollar. Ever since we've been following that 5 waves down, and we pretty much got the low. We were looking for a 3-wave recovery. We may well have that 3-wave recovery finito. But I'm going to dive in here and just explain one little thing which just popped into my head today. So, well, I can say it here. The one caveat I have is that there could be a larger wave 2 unfolding if this 3-wave movement in here so far ends up being 3 waves in wave B. So we may have like an expanded flat wave B or a running flat wave B. Given the kind of the nice acceleration lower we saw today and yesterday, I'm kind of I'm leaning in favor of the top being in, and the fact that we got a nice impulsive move down definitely kind of leans that way. That's what I'm thinking on Friday evening now. Anyway, so yeah, let's get into the hourly chart. This is kind of a very stuttery start, isn't it? So let's go to the hourly chart and kind of parse this out. I got my glass of wine. I hope you have something to kind of smooth the nerves on Friday evening. I sure need it anyway. Okay, so this is the 3-wave recovery, corrective recovery, counter trend corrective recovery that just I think completed at today's high. I think we can see 5 waves up in a C wave, which completes wave 2. We never hit the yeah, I'll get into my caveat now. The fact that we didn't hit this upper trend line, but we did reach previous 4th wave, and we did reach, as you see on the 4-hour chart, we did reach 38.2% retracement, Fibonacci retracement. So there's only a small caveat. This could be 5 waves down in wave C of B, and next week should clear that up, because if this is 5 waves down in wave 1, as I've labeled it, then we should get 3 waves up in wave 2, and I think the previous 4th wave there looks like a nice kind of central within the 3rd wave, and a kind of a pinch point in the price. So we get a kind of a 3-wave corrective rally back up to that, what is that level? 116.70 area. Yeah, that could be a good bearish signal in euro dollar. So that's kind of what I'll be following next week in euro dollar, is to kind of see if we can get a completed bearish signal and some possible entry points. So that'll be the aim for next week. And if this is correct, then euro dollar is headed on a very long journey to the downside. And it'll probably finish the euro, and I probably couldn't be happier to get rid of it, to be quite honest. I remember when the euro, I don't know if I ever said this, but I remember when the euro came in, I was working as a labourer on a building site, and I had a wage, I think it was £200. Was it £200? £200. And the euro came in. The next week I get paid in euros, and I think I got 200 and 10 euros or something like that. Blackguards actually gave me a pay reduction with the new currency, and everything went up in price. So my standard of living went down by about 30%, I'd say, the next week. I never forgave the architects of the euro after that, and that grudge has stayed with me forever. So yeah, I couldn't be happier if the euro kind of fell apart. I'll be buying Deutschmarks anyway. Okay, so that's the euro for next week. Let's move on to pound. We see on pound that we could have wave 2 complete as well after a 5 waves down, long 5 waves down journey from the April highs. And we could have a very nice and kind of, let's say, compact wave 2. We met the previous fourth wave high, or previous fourth wave high of that triangle, and we met the 38.2% retracement level within a few pips. So I'm fairly confident that wave 2 is complete. What's happening here off the high has a few valid interpretations, so let's get right into that one, shall we? The one I raised this evening is that today's low could be the completion of 5 waves down, and you can see 1, 2, 3, 4, and 5, and if this is wave 5, it has a nice 5-wave structure to it as well, so that's in its favor. The only kind of, let's say, caveat within that view would be the relative size of what would be wave 4 compared to that relative size of wave 2. So yeah, that kind of pushes me against that. It doesn't mean it's invalid, but it does push me against that interpretation. The more viable one would be a 1-2-1-2 pattern, and we have a nice interim high there, 132.15 to watch. So this second wave should correct in 3 waves, and it shouldn't break 132.15 before completing. I just need another sip of wine there. My throat is it's been killing me for the last couple of weeks, but I think I'm kind of emerging out of the end of this man flu. You girls, you don't know how bad man flu is. Okay, so we could have a 1-2-1-2 pattern here off the high in a second wave, so it'd be a second wave, so which would you would quite rightly expect an acceleration lower into support in the third wave. So this would be wave 3 of 1. So wait, no, excuse me, say wave 3 of 3 of 3. So we would expect a far larger move down. And with that kind of thought, we may even be, I may even be 1 degree too high here. So I'll kind of keep that in mind for next week. Either way, I think 132.15 is a good area to kind of, let's say, to work off in your bearish interpretation. Okay, so that's kind of pound completed. Let's get on to dollar yen, which I've been consistently surprised by of late. And the reason being that we've kind of just chugged higher every day without anybody questioning it at all. You know, I keep being told again and again and again by people who email me that, you know, one thing cannot happen because another thing is happening. You know, one classic one is, you know, dollar yen can't rise if euro dollar is rising. Okay, so we've had a nice almost 500 point rise there off the recent wave 2 low there, so 109.80 to 113.60. So we call it a 400 point rise in dollar yen, and at the same time, more or less, where's euro dollar, we've had a 112.96 to 117.70. So you've had a 500 point rise in euro dollar. So which is it? You know, both of them have been rising. You know, we've had, let's say, opposite sides of the spectrum rising at the same time, which in let's say classical or the mainstream view of economics. That doesn't work, because the mainstream view of markets and economics is as a pendulum, like a push and a pull. And if one side is pushing, well, then the other side should be pulling. And that just ain't the way that markets work. I remember in my economics lectures, I did an economics degree, and I think doing an economics degree is probably not a good idea. After doing and completing an economics degree, I would advise not to do or complete an economics degree. Because this push-pull theory, this seesaw and leverage point, and one going up and one going down, that's just the way they view the world. It's a very mechanical, and kind of simplistic way of viewing markets and economic action. And I have one question: have you ever met a human? If you're one of these guys who purports to believe that I'm rambling now, so I better get back onto the market. So I think I've covered. No, I haven't even covered dollar yen. Let's get onto the hourly chart and dollar yen. I shouldn't drink while making a video, and I've just had 2 sips. Okay, so what I'm contemplating here in dollar yen is a series of 1-2s to the upside. Now, there's a few ways of interpreting this. We could have, if you follow me for a second, we could have 1-2, and we may have topped in wave 3. Whereas if that's the case, then we'd expect a decline in wave 4, and then another run up in wave 5, and that would complete wave 1 in green. We could also have, as shown in this alternate count, we could have wave 1 and 2 in green complete, and now working on wave 1 and 2 in brown, in 1 degree lower. Or, as shown in this alternate count, we could have wave 1, 2, 3, 4, and 5. So, sorry, and what we could also have, forgive me, is what's showing on the current count would be 1, 2, wave 3 into the recent high on, when was that, Wednesday? And Thursday, Friday is wave 4 and 5. So we could have wave 1, 2, 3, 4, and 5 completed wave 1. I'm leaving that in play because of the kind of choppy look to the action to the upside there. So there's so many kind of corrections to account for that it just fits at the moment. But in saying that, I'm almost leaning towards this particular count here. Both alternate counts, both the 3 counts right now, if you can interpret it in 3 different ways, the 3 of those counts would call for a corrective decline back towards support at about 111.80 or 112 or so. So that should probably come in, let's say, Monday and Tuesday. Probably into the middle of next week anyway, we should expect some sort of decline in a corrective, either second wave or fourth wave. So just keep an eye out for that on dollar yen. Okay, so this is the Dow, my favorite market. Not. Okay. Although I have a soft spot for stocks. Stock market and the economy in general are so inextricably linked that it's hard not to get lost in the stock market, because it's such a barometer for how our own lives will be affected, in time as the stock market unfolds, be it as it's topping right now in an all-time high, and as I expect a very large decline. The stock market is telling us that we should be very prudent in our economic activities, and we shouldn't be, expanding rapidly into a high. We should be conserving, and we should be kind of training ourselves in let's say being frugal again. So, okay, the stock market is a 4-hour chart. I'm toying with the idea again that we have a top in place, but there's always caveats with that. We've had a nice decline back below the previous January highs again, so it's a very real possibility that this ending diagonal has completed. There's another alternate view on that. If you want to call this through wave move in wave 5, you could call off the wave below, you could say that this is wave 1, 2, 1, 2, 3, 4, 5, 3, 4, and 5. I don't discount that at all. But for the moment, I recognize that we're so near the high that I find no reason to be bullish whatsoever. Okay, let's get down to the hourly chart. Okay, here's the hourly. I label them 30-minute charts, but I should change that. I usually use the hourly chart. On the cash chart, you can actually view this into the low as 5 waves down. I've labeled that alternately as wave 1 down. We could have a flat correction wave 2 underway. If that's the case, well, then you'd look at those kind of previous interim highs there around the 26,600 level as kind of a magnet for that wave 2 to complete. And if that's wave 2, then you'd kind of stop that. You could place that second wave there, so you'd have a 1-2 pattern to the downside. So that's what I'm working with on the alternate side. My gut feeling is that we will get another run up in wave 5 of C, and that should probably bring us up to the 27,000 area. We have 2, if not 3 trend channels kind of pointing that direction right now. 1, 2, and the small one here in 3. So we're kind of in my general view, in a kind of let's say zoomed out view, or 30,000 foot 30,000 foot view, I would be looking at this as simply a kind of a cycling through the last couple of 4th and 5th waves, and there ain't so much on the upside left on this one. So for next week, I'll probably be looking for at least a correction higher, if not a 5th wave higher, to break into about 27,000. We should see trumpets and bells all ringing once 27,000 is reached. And of course, the choir of bulls will all rush to the fore and say that the market, of course, is always going to run higher. At that point, then you'd look lower. Okay, so that's stock market, that's the Dow. This is gold. So I kind of switched during the week there to view all this correction off the recent high as wave 2. We've had a nice spike higher today after reaching the 62% retracement. Again, that just kind of it bolsters the bullish view right now. So if we get a 5 wave pattern to the upside again and break of that kind of band of resistance there between 20 sorry, excuse me, my tongue is getting tied. 1214 to 1217. So I'd like to see a break at 1217 in a possible wave 1 of 3 to the upside. So keep an eye out for that in gold. I didn't do the 4-hour chart in gold, but again, the 4-hour chart hasn't changed. We're looking at that impulse move off the high and a corrective move. If anything was ever a corrective move, this move off the recent 5 waves higher is a correction. Okay, so that's possible 1-2 wave up completed in gold. Let's move on. Crude, 4-hour chart in crude. Okay, so we have I've labeled this as a 1-2 pattern in crude. we have a possible 1-2 pattern to the downside in CRUDE. We also have a possible wave 4 triangle in CRUDE. And the way that triangle would read would be A, B, C, D, and E. So that 3 waves up counts as a correction higher in either way that you use it. If we get a 3-wave decline beginning next week, over the next couple of weeks, into about 64 region, so you have that kind of rising trend line there would call for, let's say, a drop into about 64.50 to 64.50 to 65 to complete a possible E wave, or we have a wave 1 and 2 complete, which would call for a drop and correction again anyway, to begin a 3rd wave down. It's hard to know which one of those to call right now because we have a pretty compelling evidence for both of them. So let's get into the hourly chart. Actually, let's just move down here. So we have the recent high 75.23. So that's the, or 22. That is the invalidation level for both counts actually. We had a nice spike higher this evening. We were looking for a rally in a 3rd of a 5th wave. We got that spike in 3 of 5, and we could have wave 4 of 5 now complete or underway right now. Again, the upper trend line is hit at about 74 flat. So if on Monday brings a little pop to 74 and an impulsive move down lower again, then we should kind of perk up and take note, because the minimum expectation on the downside is about 64.50, or let's call it a minimum 65. So that's a long way down. That's at 800 points from here. So that'd be worth catching either way. The most bearish view does say that this is a wave 2 high. So on the most bearish wave count, we're looking at, you know, a slide into oblivion for CRUDE. Okay, so I think next week initial support comes in at the previous wave A high and the previous 4th wave low. So we've got a little band of support there from 71 to 71.40 or 50. So if we got an impulsive break of that and a 3-wave correction, that'd be an Elliott Wave signal off the high. Okay, so let's move into the S&P. Again, much like the Dow, the count on the the count off the recent high on the S&P is a little less impulsive than the Dow, so there'll be a little bit more doubt on the S&P. But all in all, we've still got this 4th wave triangle with a completing 5th wave up in with 5 of 5 of 5 of 5. And there's a few other degrees in there as well, if you want to parse that out a bit. But suffice to say, in the medium term, over the next month or so, I think the very, very, very top end of this rally would come in, you know, with just a break of 3,000, and then we'd be looking to the downside again for the long term. So either way, we're cycling through, you know, the final 4th and 5th waves of the S&P also. And again, my proclivity for the bearish outlook kind of brings me immediately to the most bearish wave count. And here we've got a 5-wave decline off that most recent high after reaching the upper trend line there. Last week we got a 5-wave decline. We had a 3-wave recovery into a possible 2nd wave. We had a 5-wave decline, maybe a running flat wave 2. That's very possible. We're down off today's highs again. We've got this downward facing trend channel, and we're filling that out nicely. So if we got a break below that trend channel and a rush into support or push down into kind of the 28 back below the 2900 level again into, you know, the 2860s or 70s. And we start taking out some of those interim lows, then I think we are right on the money for an impulse wave down. But would like to see a larger one develop, it possibly in, you know, wave one down in brackets, back down towards the 2800 level. Excuse me. But for now, I'm working on the assumption that the market may have topped and we're looking for an impulse pattern to downside. We'll spend the next week or so or more working on that theory, and if the declines keep coming, well, then the theory will be more and more validated, and we will be working working towards a kind of a larger bearish signal, and some entry points will probably arrive at that once the pattern starts to fill out. Obviously, we've got a high at 2940, so you don't want that to break from here on in, but suffice to say, there's a very real possibility that we're moving into the downside. We'll track it day by day. We'll see. Okay, so here is silver. Again, we're looking for the completion of a second wave in silver. And today we were looking for, well, I was contemplating this as running flat. And today we got a nice spike higher. We were looking for a break of 1455 initially to kind of call that running flat as a viable way of viewing a second wave correction. We got that today. Excuse me. We've got that today, and it's a very nice impulsive move. So on Monday, if we see a three wave correction off that to a higher low again and a push higher towards resistance, then we'd be very much in tune with a third wave up. So for next week, we're going to look for a third of a third higher and a break of resistance of 15. Let's work on that for next week. So this is the 10-year. We were looking for a run into support at 118.30. We got that. And again, obviously, we've got this nice test of the extent of the previous triangle. So we had an A, B, C, a D, and E triangle in wave 4, and now we've got a nice impulse or 5-wave pattern to the downside in wave 1, and we're looking for 3 waves up in wave 2, and we've got that underway. You know, the count in the 10-year is following along the pattern quite well. If it continues that way, then we will have a very large degree bearish signal off the end of a triangle, and that doesn't augur well for the debt load, the interest load of you find folks over in the US. You're going to be pushed for interest payments. Okay, let's see how that short-term pattern is working out. So we've got 5 waves down in a possible wave 1 blue, and we're looking at wave 3 waves up in wave 2. There is another, if you want an alternative, will I give you an alternate? There's another alternate way to look at that. You could see this as wave 1, 2, 3, 4, and we might get another run lower in wave 5. So that is also an alternate way of looking at it and a valid way of looking at it. For the moment, I'm going to stick with what I've got, because if it ain't broken, don't fix it. So we were looking for a rally up in wave A. We've got wave A. It looks like we're working on wave B, if not wave B is already completed. But this little rise today does look like it's in 3 waves. So we'd expect another move down into about the 118.60 level, down into the trend channel again, and another run up in 5 waves up to the initial target at 119.30. Excuse me. Friday night, and I am tired. Okay, we've got the fib levels there at 119.19 at 38.2%. 50% retracement comes in at 119.46, and we have a previous fourth wave there at 119.56. So we've got a kind of cluster of three targets there for, well, four really, because you've got the trend channel target also. So that'll be where wave, well, let's see where wave A would reach. Wave C would reach equality with wave A. That would be about, would be lower than that. It'd be about the 119.17, 119.19, which comes in around the 38% retracement level. It'll all depend really on where wave B here completes, so we can get a proper read on that trend channel higher. Suffice to say, it looks like we've got a 3-wave recovery after a 5-wave decline. So for next week, we'll look for this bearish signal to complete. 5 waves down, 3 waves up, and we'll start working on entry points then. Okay. Gosh, that's it. That's done. I didn't think I'd get through that, and I didn't even finish my glass of wine. So, everybody, thanks for listening. I hope you have a great weekend, and we'll see you all on Monday night back on bullwaves.org. And Godspeed. Stay safe. Bye-bye.